Hey everyone, I'm Eric and welcome back to my channel. I shared with you in my welcome video my goal of owning an investment property by July of this year. So today I'm going to talk about how I just got the ball rolling to achieve this goal. And as always on my channel, we'll go over the actual numbers that I'm working with. How many times have you heard, well, you need money to make money? I've heard that all my life, and while it's not always true, it's true a lot. This has been the biggest hurdle for me to overcome to get into real estate investment, second only to getting over my own fears and doubts. Okay, so you need money to make money, at least in the case of buying an investment property. So let's discuss the most common and potentially easiest ways to get the money you need to make the money you want. That would be a cash out refinance or a home equity line of credit, also known as a HELOC. Now, in the back of my mind, I've known about these options for a long time, but I didn't really know anything about them, and so I just kind of dismissed the idea. It just seemed risky, and it sounded like it was just more debt. Well, I finally realized that using one of these two options was going to be the only way for me to realistically come up with the capital that I needed to make an initial investment. So I decided to at least educate myself so that I could make an informed decision. So for a bank to finance another mortgage for me as an investment property, I'm likely going to need to put down 25 to 30%. According to Zillow, the average home sale price in the United States right now is $244,000. Cool. So I just need an easy $61,000 to $73,200. I don't know about you, but I certainly do not have that kind of cash laying around. And like I mentioned, this is exactly what's kept me from investing in real estate in the past. We purchased our home in the second half of 2016. Now, when I say purchased, I mean the bank bought it and they let us live here as long as we make our monthly mortgage payment. The housing market has continuously and steadily gone up since then, and especially in this area. By that alone, our home is worth more now than it was when we purchased it. In fact, we wouldn't have been able to afford this home just 6 months after we closed on it. Plus, we've done a lot of remodeling, updates, and improvements to the home. So I spent about an hour on the phone with our lender last week going over all the different options and the differences between a cash out refinance and a home equity line of credit. Relax, it's Sunday. Now again, this is my very basic understanding of the two as an average Joe that doesn't know squat. You should consult a qualified professional before making any decisions of your own. So in a cash out refinance, your bank will loan you up to 80% of your home's current value in cash. So if your home is worth the national average of $244,000, the bank will loan you up to $195,200 in the form of another mortgage. But before you get too excited, you need to pay off your existing mortgage with that amount first. Whatever's left over after that is yours to do with as you please. So for us, we currently owe just over $325,000 on our mortgage. Let's say it appraises at $500,000, which is a conservative estimate based on my neighbor's house that just got appraised. So if the bank were to give me 80% of that, that would be $400,000 minus the $325,000 that I owe, and I'd be left with $75,000 cash to do with as I please. Currently, I'd be looking at a fixed interest rate of about 4.1%. where my current interest rate is 3.25%. There would be approximately $4,000 in closing costs. I currently have 26 years left on my mortgage. Doing a refinance to a new mortgage would obviously reset that clock back to 30 years. So my monthly mortgage payment would go from $2,274 a month to about $2,348 a month, which is a $74 per month difference. If I chose this option, I would be given a lump sum of $60,000 to $75,000 in cash. Now, a home equity line of credit is essentially just a credit card. How much credit you're approved for is again based on how much equity you have in your home, as the equity is the collateral. This option currently has a 5% interest rate, which is variable. Historically, this interest rate has been pretty stable, with it never going above about 8%. Keep in mind that the average credit card interest rate is currently about 19%. There are no closing costs and very little to no fees at all. Assuming I was approved for a maximum line of credit of $60,000 and I were to max it out, my monthly payments would be about $250 a month, which would only cover the interest. Now, with a home equity line of credit, you can draw off of it what you need when you need. Versus with the cash out refinance, you're just given the whole lump sum. So again, my plan is to use this money as a down payment to finance a rental property. Spend a little to fix it up and then rent it out. Now, as this is an investment, the idea is that the rent I would get from that rental property would cover all expenses plus repayment to the loan. So we ultimately decided to go with a home equity line of credit. There are many factors that went into this decision, but here are the basics. I'd lose my 3.25% interest rate for a 4.1% interest rate. Now, this particular factor is going to depend on what interest rate you currently have. If you could refinance into a better interest rate, that alone could change the decision for you. I also didn't want to restart my 30-year countdown. I know having only shaved off 4 years from the 30 years is really not that big of a deal, but it kind of is. I feel like even though that's a tiny dent, I didn't want to start all over. Another factor was simply the costs of one versus the other. With a cash out refinance, you're going to lose at least $4,000 right off the bat in closing costs. The home equity line of credit virtually cost zero. And to be honest, the thought of somebody just handing me $70,000 cash is terrifying. Remember my impulse buying that I'm trying to curb? Imagine the drone I could get with that. I just like the idea of having the money there and available, but I can just pull from it what I need when I need. Then when I pay the balance down, I can draw from it again. So I pulled the trigger. I submitted the application to our bank last week. So this was a pretty big deal for me because, as I've spoken about, I've always dreamt of more, but I've never done anything more than just that, dream. And that's what this channel is all about, actually taking significant and substantial steps towards the goals that I want to achieve. Well, so far this is the first actual significant step that I've taken towards that goal, and I'm pretty nervous. Everything's going fine. Why would you take the risk? It's not like you're struggling. One of the promises I made to myself when I started this is that I would stop making excuses, stop being afraid, and ignore the naysayers. Now, this isn't to say I'm going to be reckless and just throw caution to the wind, but there is no reward without risk. Change doesn't happen without action, and I'm finally taking action instead of just dreaming about it. I'm making it happen. So I'm told the application process usually takes 4 to 6 weeks, and that will likely include an appraisal. Once we have that cash in hand, we'll begin seriously looking for an investment property, and obviously I'll keep you guys updated on that whole process. Thank you guys so much for watching. If you found even a shred of any of this information useful, helpful, or at the very least entertaining, I'd greatly appreciate it if you hit that like button for me. Please subscribe if you haven't already to continue learning with me on my financial journey. Leave any questions or comments down below, and until next time, make it happen. Oh, it's delicious.